Hello guys, welcome back to the channel where we are solving the CBSE 2003 question paper for accountancy. Here on the channel we have multiple resources for you to prepare thoroughly for your exam. Do subscribe to the channel to receive notifications and get access to all these videos that we have on the channel for your preparation. We have videos on the previous year question papers, we have CBSE sample papers for 2024 that's being solved. We have interest on drawings, the scenarios, we have important adjustments that students mostly miss out, we have some important questions for suggestions for CBSE and ISC 2024 examination. To check out the channel, it will really help you to prepare, and you can be rest assured that the answers that are discussed are 100% accurate. Without further ado, let's get started, and in today's video we're going to solve question number 17 and 18 for our ready reference. So question 17 that we have, this is a sum on retirement. Suman, Vivek, and Vinod were partners in a firm sharing profits and losses in the ratio 5:3:2. Suman retired on 1st April 2022 after making all adjustments relating to revaluation, goodwill, and accumulated profits. The capital accounts of Vivek and Vinod showed credit balances of 3,60,000 and 1,40,000 respectively. So the adjusted capitals for the continuing partners is given already in the question. It was decided to adjust the capitals of Vivek and Vinod in their new profit sharing ratio. So, what's the new profit sharing ratio? Suman is going away, so the continuing partners will share their profits in the ratio 3 is to 2, right? So, the new PSR will be 3 is to 2 only, just for your reference. Past necessary journal entries for bringing in or withdrawal for the necessary amounts. Show your workings clearly. So if you add the existing credit balances after all adjustments, 3,60,000 and 1,40,000, you get 5 lakh here. So that's the total capital that they will have in the new firm after retirement of Suman. So let's have a look at the solution. Before getting into the journal, let's have a look at the working notes first. The capital after adjustments for Vivek and Vinod, it's 3,60,000 and 1,40,000, which is already given in the question here. New capital in the ratio of 3 is to 2, which is their continuing ratio. So total capital is 5 lakhs as we discussed here. So that is going to be distributed in the ratio 3 is to 2. So that becomes 3 lakh and 2 lakh. Now if you compare this, Vivek has an existing capital of 3 lakh 60, but he is supposed to maintain 3 lakhs. So 60,000 is his excess capital that he needs to withdraw. Okay, this is the money with which Vivek will be taking away from the business. And for Vinod, his existing capital is 1 lakh 40, whereas he has to maintain a capital of 2 lakh now post adjustments. So he has to bring in 60,000. So the journal now is straightforward. After having done the workings, Vinod brings in money, so cash and bank account debit, cash or bank, to Vinod's capital account 60,000 being amount brought in by Vinod. And for Vivek, since he is withdrawing the money, so Vivek's capital account will be debited to cash or bank account being the amount withdrawn by Vivek 60,000. Pretty much straightforward, right? Let's move on to the next question that we have, number 18. Question 18 is a sum on change in profit sharing ratio. We have four partners, Anu, Manu, Tanu, and Kanu, who are sharing profits and losses in the ratio 2 is to 1 is to 2 is to 1. And they have now decided to share future profits and losses in the ratio 4 is to 2 is to 3 is to 1. With effect from 1st April 2022. On this date, goodwill of the firm was valued at 1,20,000 and general reserve appeared in the books at 36,000. You are required to pass journal entries for the above transactions and show the workings clearly. So before jumping into the journal, let's have a look at the workings, which are very important. Calculation of the gain or sacrifice on change in PSR, and we all know the formula. Sacrificed share equals to old share minus new share. For Anu, the old share is 2 by 6, whereas the new share is 4 by 10. So Anu is gaining 1 by 15. Similarly for Manu, 1/6 was the old share minus 2 by 10, which is again 1 by 30 gain. But for Tanu and Kanu, they are sacrificing 2/6 minus 3/10 is 1 by 30 sacrifice, and for Kanu 1/6 minus 1/10, which is 1 by 15 sacrifice. So how much will the goodwill adjustment take place? The gaining partner are supposed to compensate the sacrificing partners. So gaining partners' capital account will be debited with the value of the goodwill, which their respective gain, and the sacrificing partner's capital account will be credited. So 1 by 15 into the goodwill value, 8,000 is the amount which will be debited to Anu's capital account, and 4,000 for Manu, which is 130 into 1 by 20, 1,20,000. For Tanu, again same thing, Tanu and Kanu, 4,000 and 8,000 will be credited respectively. Okay, so let's move to the journals. The first journal that we will have is for general reserve, and during change in PSR, the general reserve is distributed among the partners in their old profit sharing ratio, which is 2 is to 1 is to 2 is to 1. So general reserve account debit to Anu's capital, to Manu's capital, to Tanu's capital, and to Kanu's capital, the amount. Be very careful. One mistake I have seen students doing is changing the name, the sequence. You cannot change that. It has to be in the same sequence or you will mess up the ratios as well. Follow the same sequence as given in the question. Similarly, the next journal that we have, as we discussed, Anu's capital account debit 8,000, Manu's capital account debit 4,000, to Tanu's capital account, to Kanu's capital account 4,000 and 8,000 respectively. So these two journals are there, and both the sums that we discussed, these are for 3 marks, and the journal, the marks distribution is 1.5 mark for the first journal and 1.5 for the second one. Similarly here as well, 1.5 and 1.5 for each. Okay, this is the marks distribution. If you have any questions, do let me know in the comments box below. Hope this helped you understand some of the concepts. Hit the like button and do share with your friends so that everyone can get benefited. Stay tuned because we are going to have loads of solutions, not only from this question paper, but from other question papers as well. Thanks for watching.